It is very premature to think about a pause in rates. This is straight from the horse's mouth, straight from the top dog at the Fed, Jerome Powell. And we learned a whole lot about what the Fed is going to do and what that means for the markets today. And let's break it all down. Let's get into what he was talking about. And let's get into our decisions, et cetera, et cetera, et cetera. Pause in rates. This was the big thing people were hoping for in this Fed meeting. Is he going to come in with some dovish lingo? And is the market going to be able to rally because it's so negative? Well, the point of our strategy is to stick to the fundamentals. And this whole notion that the Fed was going to pivot was not necessarily tied to the fundamentals. It seemed somewhat contradictory to what they were saying, although there were hawkish surprises we'll get into in a second. But we needed inflation to come down before there was going to be a pivot. That's just the name of the game. We haven't seen that yet. It's not happening. No pivot. He just came in full hawk, in my opinion. The Fed is increasing the target range in past videos and amongst market participants. We had initially expected to land somewhere between 4.5% and 5% on the Fed funds rate. The Fed has articulated this. Hawkish members like Jim Bullard have articulated this range. And now, yet again, as we've discussed on this channel, the Fed is continuing its trend of moving the goalpost in the hawkish direction because inflation has continued to be more persistent than expected. We have for months have been saying peak inflation, peak inflation, peak inflation. We haven't seen it. Now, I'm not trying to sound like this egotistical maniac trying to flex or just so caught in my own ways. I'm not, okay? I'm not betting so aggressively this direction. I'm actually very defensive with a tremendous amount of cash and caution right now. I'm not betting either too aggressively in either direction. It's a very difficult market. We have to be humble about that because it's a very difficult market. It is a very, very difficult market for all of us. Yes, some of us are making money. Yes, some of us are not. But some days we're doing both. And that's just the way it is right now. So, hawkish surprise. What hawkish surprise? The market rallied at first. He just talked a little tough. No hawkish surprise. There was a hawkish surprise. As we just said, the notion of rates being higher than previously forecast is hawkish. End of story. Second, I don't know if you remember. We've talked about it on this channel. If you've been listening to these press conferences, he's used this language. Before the Fed started hiking rates, there was a lot of questions, when are you going to start hiking rates? Jerome Powell would say, we're not even thinking about raising rates yet. This was in COVID times. We're not even thinking about raising rates yet. We'll let you know when we're thinking about raising rates. So not when we're thinking about raising the rates, when we're thinking about opening the floor to begin thinking about raising rates. He said today it is premature to think about a pause. Maybe you can try and extrapolate that. Oh, we got rid of the first thinking about. I'm going with two thinking abouts there. Premature to think about. Yes, the rate of increases might slow. He did say the speed wasn't so important. I think that's a hawkish thing. I think it means we can do another 75. I think we have the green light for another 75 because early, when you hike 75, it has an effect. You're moving fast, it has an effect. Now rates are high enough that speed doesn't seem to matter and the Fed wants to move expeditiously, word they use, not mine. I see the front loading of hikes continuing. I don't really see a reason for them to trail off. Yes, once inflation begins to come down, and it might, the next two reads before the next Fed meeting, maybe that'll be something. Maybe we get Goldilocks data on inflation. But if the past data is anything, and we're not, maybe the Fed will will, decrease its rate. Maybe that's going to happen. But we just heard from him. We have the freshest lingo we could possibly have, and it's hawkish. It's hawkish. The Fed gave us a hawkish surprise. Rates are going to go higher than previously expected. They're not thinking about a pause. They're certainly not thinking about a cut. I don't know what you can think is dovish in this. People seem to think that, they say, oh, they'll keep in context, the cumulative increase. Well, okay, maybe you can extrapolate that. I mean, that's absolutely not new information. He's been saying that in the past. He even said, as I said in the past 2 Fed meetings, at some point it may make sense to decrease the rate of interest rate hikes. Yes, it does. We are not going to be hiking 75 basis points until the sun absorbs the earth in like 3 billion years. So yes, at some point it will make sense to decrease the rate of interest rates. But if there's one thing that should be clear after today, it's that the Fed is not deviating from its inflation path and will be hawkish, aka aggressive in suppressing that, and is willing to see unemployment go up, see housing prices go down, see the stock market collapse or crash or pull back. They're willing to see a lot of pain. They're willing to see a recession. They're willing to see a recession, to see inflation come down. This is a long-term investment in America. There was a mistake. There was a spill. They got to clean it up, and they're cleaning it up first, and then we can worry about things like economic growth and these kinds of things. Finally, I just had one really good point that I forgot. Let me see if it comes back to me in the next couple seconds. This is the one pros and cons of speaking off the cuff. You can really get my emotion. You can gauge my levels of certainty, these kinds of things. But sometimes I forget when I'm talking, like a point comes to my head and then I forget it because I don't have it written down. I might hopefully come back to it tomorrow if it doesn't come back to me in the next couple seconds. We talked about, to sum up, we talked about the increase in the range of the peak Fed funds rate. Increased, went up. We talked about what the Fed doesn't seem to be too concerned about. And one last thing. Sorry, I'm going to drop off in viewership at this point, my 20 plus views. But hopefully it'll come back to me. I'm blanking on it. There's one more very crucial thing. I need some notes. Anyways, what do we do here? Our portfolio construction is not changing. Didn't change that much today. Yes, once we got the pop, we did add to puts, but very small allocation. 30% cash, might even be a little higher than that. 30% energy. 30% downside protection and other bets. We're sticking with that formula. Yes, we're not seeing tremendous gains today, but we didn't see tremendous losses on Monday or Friday. Okay? We're holding in there. We're not all cash. We're still in things that are paying us dividends, but we're cautious and we're well balanced. And we will see what happens and adapt. So that's today's video. If you have any questions, feel free to leave them in the comments. I will respond. That's today's video. And until next time, peace out.